Hola mi gente, welcome back to the channel. My name is Sean and this is We Are Investing, a channel that's dedicated in investing and personal finance. On today's video, we are going to go over many ways on how you can short the market. We're going to hop on over to TD Ameritrade's Thinkorswim and I'm going to go over many examples. So if you're interested in making money when the stock market is falling and making money as a bear, making money whenever you can, then this is one way to do it, by shorting the market. But with all that being said, before I teach you on the ways that I know to short the market, there are other ways to do it as well. I'm not going to cover everything in this video. So if you have a preferred way or you have a strategy that works for you and you just happen to click on this video, then share with us down below in the comment section. How do you short the market? Have you ever shorted the market? Let me know in the comment section down below. And also you can support the channel by hitting that subscribe button, ringing that bell, and smashing that like button. When you ring that bell, YouTube will notify you when I upload more videos so that you can continue to smash that like button, and I really do appreciate it. And if you want to join the community of over 500 investors, you can do so by joining the Patreon. It's $5 a month and the link is provided down below. But your time is valuable to me. I want to get right into the information, so let's head on over to the computer. Let's do it. All right, I'm going to show you how you can short the market. And these steps are going to be easy. It's going to be easy to understand. And I'm also going to explain to you the risk with shorting the market and why some of these methods are going to be less risky and probably a better way to short the market, at least in my personal opinion. So how do you short the market, and what am I referring to? Well, by the market, I mean a major index or a major ETF. I'm talking about the S&P 500, the NASDAQ, the Dow Jones, or maybe even the Russell 2000, or a major ETF like the QQQ, which is essentially the NASDAQ 100. So if you take a look at the screen right now, what we're looking at is the SPY. This is an ETF that follows the S&P 500. See the stock price, $451.75. If we take a look at the S&P 500, the stock price is $4,532. So very close. It basically tracks the S&P 500. Now, a way that you can go short the market is by inverse ETFs. And this is probably the easiest way. It's probably the best way in my personal opinion. So the one that I like, especially in this climate where tech is selling off, well, what's tech heavy? That's the NASDAQ, the NDX, the NASDAQ 100 index. You can see that today, this index dropped 1%. The prior highs were at $16,764.86. We're at around $15,000. We're in correction territory. We dropped more than 10%. I wouldn't short the market right now because we're approaching the 200-day EMA. We're getting very close to oversold in the RSI, and we could see a bounce back. But let's say I'm overall bearish, and right now is a good time to short the market. Let's just play it out. How would I do it? Well, if tech is going to sell off, or I think tech is going to continue to sell off, well, a tech-heavy ETF is the QQQ. This is the Invesco Trust, the Invesco QQQ Trust. Today it dropped 1.1%. Let's go back. What did the NASDAQ drop? The NASDAQ dropped 1.07%. It tracks the NASDAQ 100 very closely. So I would like to short the QQQ. But Sean, what is the best way to do that? Well, this is Thinkorswim, and we have so many tools at our disposal. The best way to do it, in my personal opinion, is to go short the QQQ by going long the SQQQ, which is a 3x leverage against the QQQ. Was that mumbo jumbo? Did you understand what I just said? An inverse ETF essentially goes up when the original ETF, in this case the QQQ, goes down. You make money when the QQQ goes down by going long the SQQQ. You're short the QQQ, but you're not shorting an actual position. So your risk is limited. You can only lose the money you put in. And that's why I think going long inverse ETFs is a great way to start. Now, if you take a look at what happened with the SQQQ today, it went up 3.48%. But how so if the QQQ only dropped 1.1%? That's because it's triple leverage. So these are extremely volatile. These are boom or bust types of plays. And these are not long-term investments. I wouldn't just keep my money in the SQQQ thinking, hey, it's going to drop eventually, right? Because if you take a look at this chart, it is just a steady downtrend. It's not a good way to play something long-term, not in my personal opinion. If you want to do a long-term bearish play on the QQQ, then buy a long-term put option on the QQQ. That's probably a little bit less risky, and long-term, if you really think this index is going to drop, it's a better way to play it. But if you're thinking short-term, over the next couple of weeks or over the next couple of days, the SQQQ is going to go up because the QQQ is going to drop, then this is an easy way to play it. And if you don't like that 3x leverage, there are other ones out there that are just single leverage. Or if you're a gambling man and you want quick returns and you're willing to risk more and leverage your money, then you can buy call options on the SQQQ. You're buying an option on a 3x leverage position. So you're extremely leveraged now. Now, I just gave you one example in Thinkorswim, and I will provide this website, a link to this website in the video description. But this website gives you a list of a lot of inverse ETFs. The strategy remains the same. What you're shorting changes per the symbol. We went over the SQQQ, which is a very popular one. It has a lot of money in total assets. It's a 3x leverage. It's a good way to short the NASDAQ. But if you wanted to go short the S&P 500, you can buy the SH. That's only 1 times leverage. Or if you're looking for an ultra short on the S&P 500, you can buy the SPXU and get 3x leverage. This website has a lot of the indices. It has the S&P 500, the NASDAQ, the Dow, the Russell. You can even go short treasuries. There are a lot of ETFs out there, but essentially the point I'm trying to get across, and probably the easiest way to short the market, is by going long inverse ETFs. But if you don't really want to go long and you want to short a position with either a put option or by just going short shares, I got you as well. Let's go over another way to short the overall market. Let's take a look at the SPX, which is the S&P 500 index. You can also look at the NDX, which is the NASDAQ 100, or the DJX, which is the Dow Jones. These major indices, you can short them, but you cannot buy or sell stock. You see how buy and sell is grayed out because you cannot do that. But what you can do, obviously you can't do it if it's grayed out, but what you can do is you can buy calls or puts. And if you want to go short, which one are you doing? Well, you're buying put options. You can also get pretty fancy and you could do some spreads as well. You can do a call credit spread. That's a way to short the market. Or you can do a put debit spread. That's another way to short the market. But essentially, you can use the options market to short a major index. Now you're taking a look at this S&P 500 index options chain, and you're saying that, whoa, things are costing $14 for the option. Well, you got to times that by 100. So you're going to end up paying $1,400 for a position that essentially can go bust. That's a lot of money for one trade. I got you. There's another way to do this. You can buy puts on the SPY, which is the S&P 500 ETF Trust. It is $451 instead of $4,500. And instead of spending $1,400 on the position, you can spend $129, $109. You're spending a tenth of what you would by shorting a major index. If you have a portfolio where one trade at $1,400 is just too much risk, that is a-okay. There are other ways to play this as well, and the SPY is one of them. But let's say you want a real nail biter. You're like, give me the risk, man. I want to feel the pressure. I want to feel alive. I want to feel like they are trying to squeeze me because I am shorting this stock. Well, like I said, you cannot buy or sell stock on the SPX, so you cannot sell stock to short the SPX or the S&P 500. But what you can do is you can sell a stock against the SPY or some other ETFs that track major indices. As you can see here, just a quick right click of the just a quick right click of the mouse, hitting sell when you don't actually have any shares and selling it to the market, you are going short. What is going short? Well, why are you watching this video if you don't know what going short is? But let's go real quick into what shorting a stock is. You're essentially borrowing a stock from the market, then you're selling it right away. Let's say the stock's $100 and you borrowed it from Joe Schmo. You then sold it, you collect $100, but you still owe that stock. At some point, you got to give it back to Joe Schmo. If the stock drops to $50, you can buy it back for $50, give it to Joe Schmo, you profit the difference, $50. Congratulations, you just made money by shorting a stock. But the risk is that stocks can go up and up and up. They can go to the moon, they can go to Mars, and they can go to beyond, and they can go to the beyond as well. So the risk is you short a stock at $100 and it goes up to $1,000. And excuse me, TD Ameritrade is calling your mobile phone right now. You got to close your position, my man. You're being margin called. Well, you close that position, you buy the stock back for $1,000. You got to give it back to Joe Schmo. You lost $900 because you collected 100 at first. That is the risk with shorting a stock, and it's not for everyone. There's a lot of risk to it. There's a lot of pressure. If you do not do well under pressure and you have problems with anxiety, do not short a stock. Just go long in an inverse ETF or buy a put option. You know what your risk is. Have it well defined before you even enter the trade, and take it easy. Go take a walk, go play with your kids, go read a book, go play Xbox. I don't care. You don't got to look at the screen all day, and that's the best way to do it. So in my personal opinion, the best way to short the market is going long an inverse ETF if it's a short-term trade. If you're looking for a longer-term trade, buy put options on an ETF that follow a major index. That index, you obviously have to believe, is going to be worth less in the future. Now, like I said at the beginning of this video, I cannot cover everything, but if you have a question and I did not answer it in this video, then comment down below or join the private Discord by joining the Patreon. You will definitely catch me there. The link is provided down below. But I thank you so much for your time. I thank you so much for sticking around to the end. You are a real one, and I really do appreciate you. But outside of that, it's a wrap. It's been real. It's been fun. It's been real fun. And this is We Are Investing, and together we are invincible. Dale.